You can now buy stocks like Tesla and Nvidia directly inside your crypto wallet. No broker, no Wall Street account, no bank in the middle. Just open your Trust wallet and trade tokenized stocks. Sounds revolutionary because for years crypto promised to rebuild finance from the ground up. Now that future might actually be here. But there's one problem. Most people buying these tokenized stocks probably don't understand what they are actually buying. Something feels off, but what? The crypto industry has spent years trying to bring real-world assets on-chain. First, it was stablecoins, then tokenized treasuries, now stocks. And if this trend continues, we might be watching the early stages of Wall Street moving directly onto blockchain rails, quietly, without most people paying attention. Before we get excited, we need to understand exactly what's happening. BNB Chain recently introduced something called bStocks. These are tokenized versions of traditional equities. Think Tesla, SpaceX, Nvidia, Circle. Instead of buying shares through traditional brokerage, you buy blockchain-based tokens, representing exposure to those stocks. And these tokens can be traded directly inside Trust Wallet. That's a huge shift, because now stocks are becoming accessible through crypto-native infrastructure, not traditional finance infrastructure. The promise: 24/7 trading, faster settlement, global access, and direct wallet ownership. Sounds incredible, especially if you live in the parts of the world where accessing US equities isn't easy. But this is where things get interesting. This isn't just about buying stocks in a different app. This could fundamentally change market access. Think about it. Traditional investing has friction. You need broker approval, KYC, banking rails, sometimes high minimum deposit. For millions of people globally, that creates barriers. Crypto removes many of those barriers. The problem with crypto is not information, it's noise. Too many ideas, too many signals, and not enough clarity. So inside the Gekood app email newsletter, I filtered that down into what actually matters for building passive income and staying consistent in the markets. You can join the newsletter using the link down below. Let's keep going. Now imagine this world. You hold stablecoins into your wallet. You swap the stablecoins into Tesla. Then later, use the Tesla position as collateral in DeFi. That changes everything, because now stocks aren't just assets you hold. They become programmable financial primitives. Assets that can move across lending markets, liquidity pools, and on-chain financial systems. That's where this becomes bigger than just tokenized equities. This becomes the merging of TradFi and DeFi, and that's massive. But this is where things get complicated, because tokenized assets always introduce one critical question: who holds the real thing? If bStocks are backed one-to-one by real equities, who owns those actual shares? A custodian, a broker, a central entity? Because if someone else controls the underlying asset, then you are introducing trust, and trust introduces risk. This leads to even a bigger question: are these truly decentralized? Or are they simply traditional products wrapped into crypto branding? That matters a lot, because there's a major difference between owning a stock and owning a token that gives you stock exposure. Those are not always the same thing, and many users may not realize that. Quick one, before we continue, if you want the exact tools and the platforms I personally use, I've put everything into one place, plus discounts so you don't overpay. You can check them out at Gekood Hub Deals page. The link is down below. Now let's keep going. This is the part that most people ignore. Regulation. Stocks are securities, and securities come with heavy legal requirements. That means tokenized stocks sit in a very sensitive area. You have regulators asking very difficult questions. And if regulators decide that these products violate security laws, then things can change very fast. That's why this opportunity is huge, but the risks are real too. Tokenized stocks could become one of crypto's biggest narratives, not meme coins, not hype, actual financial infrastructure. Because if stocks move on-chain, finance changes forever. Markets become global. Settlements become instant. Assets become programmable. That's the bullish case. But here's the real question. When Wall Street comes on-chain, who controls the rails? Because the future of finance won't just be about putting assets on the blockchain. It will be about who controls access to those assets, and that may matter more than the technology itself. Something feels off, but maybe that's exactly where the opportunity is. What do you think? Are tokenized stocks the future of investing, or are they just centralized finance wearing a crypto mask? Let me know down below. Most people in crypto are just watching, reacting, and chasing moves after they happen. But a small group, they understand how this space actually works. If you want to be on that side, where you see opportunities early and actually know what to do, then join the Gekood Hub email newsletter using the link down below. Don't just watch the market, learn how to move in it. I'll see you on the inside.